Hey, hi everybody. Welcome to my channel again, Russell Moore, dedicated to financial literacy. I want to welcome you to the channel again. Be sure to subscribe, hit the like, and the notify button. Okay, if you want more content in the future. I want to get right into this. Actually, this is an interesting topic for me, and I've been doing my research on China and should we invest? Should you invest? Should I invest in China? Well, I've already answered that question. So here's my disclaimer. I'm not telling you not to or you should. That's going to be your decision, okay? So I am not trying to encourage people what to do with the Chinese stocks. You're not suing me, all right? So, but I do want to go over this. I'm going to touch on delisting. I want to touch on regulations with the CCP, the slowing economy in China. We'll talk about all of that. But I want to first start off by talking about, I'm just going to mention a few companies. This is definitely not the end and the be all of all the companies in China. They got tons of companies. I'm not going to touch on NEO or anything like that. But I want to talk about some companies that, this is deep to me. Alibaba is down 73%. I looked at this stock price today. It's like $74. This is a company less than a year ago was at $300 a share. And they're right now at $74, $75 a share. Yum China, Yum, Y-U-M. It's an American company in China, but Yum Brands. You guys heard of Yum Brands? KFC, Pizza Hut. They're down 43%. Tencent company, 53%. JD.com, 55%. These are major tech companies in China. They're the Microsoft, the Googles, and the Amazons, and the Netflixes of China. Okay, and all of them are down severely. And so the question is, there's been this sell-off. Alibaba 73%. Does it deserve it? Does it deserve this type of sell-off? Is what my question the viewers are asking out there. Should I invest? And if I do, should I sell? And if I don't sell, do I hold it? How long? And if I don't have any of these shares, if I don't have any of China's shares, should I purchase? Well, that's going to be up to you. I'm just going to give you some information and then you decide. All right. Now, as I mentioned, Alibaba, 73%. I want to talk about really, first of all, the intrinsic value, because the first question I always hear is there anything wrong with the business? Is there anything wrong with these businesses? With Alibaba, Yum China, Tencent, JD.com, is there anything wrong with them? Are they losing money? Are they in debt? What's the fundamentals? What's the fundamentals of these companies? And let me just give you a quick brief rundown. If you look at the intrinsic value, and I'm not going to go into all of that, what that means, and there's an intrinsic value calculator that you can look it up online. And basically it just determines what this company will be worth in the next 10 or 15 years, how much cash flow they'll have. We'll just say it like that. What would they be worth from a share price standpoint? Just based on their current growth. Well, Alibaba, we're looking at least, and this is the discounted version. This is with all pessimism, $230. Between $196 and $230 is where it's going to go. I think it's going to go further. This is just this is a moderate version. This is a moderate estimation. Yum China, around $86 to $90 a share. And guess where Yum China is right now? About $35 a share. Alibaba's at $74, $75 a share. Tencent down 53%. Intrinsic value, it's headed towards around 837. That's what they estimate. The intrinsic value, 837. You know where they are now? Around 355, 358. Between 355 and 358. These companies are like 50, 60% undervalued right now. The same thing with JD.com. They're undervalued. They have strong profit margins. Still, they have revenue. They're still growing revenue wise. This is all on the internet. They have strong cash flow. Alibaba has so much cash. To get this, they have so much cash, a boatload of cash. They've got so much cash that if they wanted to pay off all their debt right now, they could. Amazon can't even do that. Yum China, they hardly have any debt at all. Hardly any debt. All of these companies, very low debt, high cash flow, profit, revenue, they got all of that going on. Strong fundamentals. Next question, what are the shares really worth? And are they undervalued? I just answered that. I just told you what they're worth. they're, why is the market price so different from the value of the business? That's the underlining question. If they've got all this revenue and they're profiting and they're doing so well, why is the share price down? Number one, panic selling. And I'm going to go over the reasons why they're panic selling. But the number one reason that most sell-offs take place, the number one, is news, bad negative news reports. And then the other one is emotions and herd selling. Uh-oh, we got a negative report. Now people are selling. Oh, I better sell. And people just follow versus doing their own research and making their own decision. So herd selling as a result of panic selling. So the panic people, the panic sell, and then the people that don't do any research follow them and they sell. And now you've got this huge sell-off and nobody's doing the true research to see how valuable these companies are. And see, and in order to research this, you've got to research China. So let me just give you a couple of things about China where we've been misinformed. Number one, let's talk about the delisting for a minute. Delisting, because that's been a concern. President Trump, when he was in office, said, look, we're going to delist companies that will not allow us to audit their books, accounting books. Any Chinese companies that will not allow us. So what he did is he established a board, the Public Company Accounting Oversight Board. And he also signed into law an act. And the name of the act is Holding Foreign Companies Accountable Act. HFCAA, Holding Foreign Companies Accountable Act. Now, I'm not against that. You know, China's like our number one competitor. We're competing against them. I hate to call them an enemy, but basically they are like our enemy. And so I didn't have a problem with him saying, look, you're going to be on our stock market. We want to know what kind of practices that you're having from an accounting standpoint. But here's the problem. They already are being audited by an international companies. See, we think they're only being watched by China. They're only being audited by China. That's not true. The companies that they're being audited by, Alibaba, Young China, Tencent, JDcom, Neo, and all of them, they're getting audited by an international company, not a Chinese company. So that doesn't mean that they still can't, do some shady stuff, but that goes for any company, even the American ones. The American companies can, same thing. So that's one misnomer. That's one thing that we want to get rid of. Is that, and here's the thing about the delisting. President Trump said the delisting timeline will be 3 years. You have 3 years to comply and allow our SEC, our board, to audit you. And it starts in 2021. So they're not going to be delisted. If they get delisted, it won't be until 2024. So we got 3 years. Why are you not buying this stock? We got 3 years, gang, before there's a delisting. And to be honest with you, I don't think there's going to be a delisting. You know why? The investors, most of the investors that are investing in these companies from China are Americans. It's Americans, you guys. Most of us are the ones that are investing. And here's another thing about delisting. If it does get delisted, they have dual listings. They're in the American market, but they're also in Hong Kong, the Chinese Hong Kong market. So all they're going to do is just, okay, we'll just stay in Hong Kong, and then we can move our shares. If depending on what brokerage firm you are, like Fidelity, you can definitely transfer. If your shares get delisted, if you lose out, you can transfer them to the Hong Kong market. You guys, that's not a reason not to buy shares. That's not a reason to sell. Delisting. Learn about it, find out about it. What is this delisting all about? And is it really going to happen? I don't think so. Okay, now here's another thing. The CCP is out to destroy these companies, the regulators, all these regulations. Well, you got to find out what they were regulating. Let me give you an example. Alibaba, Alibaba, they're like the Amazon of China. Okay, here's what they were doing. They had their merchants, the people that were selling on their platform, they had to agree not to sell on other platforms, the competitors. That's like that's like Amazon telling us we can't sell on eBay. You can't sell on Etsy. You can only sell on our platform. If you sell on our platform, you cannot sell anywhere else. That's monopoly. And so the CCP, the Chinese Communist Party, said, no, that's not fair to your competitors. We want everybody to be able to make money. A lot of people don't realize China is more capitalist than we think they are. Yes, I know it's CCP, it stands for Chinese Communist Party. I get that. But their economic belief from their last president who established, he realized, look, capitalism is what's going to work. So their whole system is more capitalism. Now they are authoritarian, meaning they'll shut you down. They still have the authority. They're not as free as America. And they do have a heavy hand and they probably go too far. But to say that they shouldn't regulate some of this, regulations are good in some cases for some of these companies because the smaller companies were not able to make money because they couldn't get any of the merchants to come over because they had a commitment with Alibaba. And the same thing with Tencent. A lot of these companies, larger companies, and what they would do is they're swallowing up the smaller ones, taking all the market share. We're addressing that with our tech people here. That's why do you think Congress has been meeting with our big tech? That's been one of the issues. How their competitive practices against other companies, you guys. We can't blame China for that, okay? All right. I am not this pro China dude, okay? So don't send me any comments. I'm just saying we got to look at the truth, all right? And then the last thing, a slowing growth economy. Yeah, their economy is slowing for various reasons. Um, uh, I think this year is like the uh, GDP is like 5%. They were averaging around 8 to 9% growth, and this year it's the lowest it's been in years. I mean, a long time, 5%. But that won't last forever. My point is, there aren't any good reasons to not invest in these stocks. I'm not telling you to do it though. You got to do it and do your own research first. What do I always say? If you don't learn, you won't earn. If you don't learn, you won't earn. But find out why. Don't just pull out of a stock. Don't just pull out of a company and stop investing in it when you haven't really done the true research and you're just following what other people do or say. And so what we have with a lot of these Chinese stocks is particularly, and even Charlie Munger. Warren Buffett's sidekick, his buddy, I should call him sidekick. He's not his sidekick. He's a great man and a great investor. Charlie Munger said that Alibaba months ago was highly undervalued. And when he said that, I said, I need to look more into this and not just listen to the street. Okay. And he was right. They're really undervalued right now. I mean, think about this. They're down 73%. Look at the stock price from last year. Just look at it. I want you, this is what I want you guys to do. Look at the stock price of all these companies I just brought up, the four companies. Look at their stock price last year or 2 years ago. And keep this in mind. They're still bringing forth revenue. They're still growing, maybe not at the same pace. They're still profiting. They still have strong cash flow. They have low debt or no debt. I mean, that's wonderful from the fundamental standpoint. They're still good, strong companies. All right, I'm done with this segment. I may do a part two. I'm sure I'm missing out a couple of things that I should have informed you on, but take a look at it. Look at China's stocks. All right. Have a wonderful, wonderful day, and I pray that you'll be blessed always and forever.